Direct tax implications in budget 2022 to 2023. Some taxpayers might realize that they have committed omissions or mistakes incorrectly estimating their income for tax payment. To provide an opportunity to correct such errors, a new provision has been proposed permitting taxpayers to file an updated return on payment of additional tax. This updated return can be filed within 2 years from the end of the relevant assessment year. There will be a trust reposed in the taxpayers that it will enable the assessee to herself or himself to declare the income that he or she may have missed out earlier while filing her or his return. Um, Tax related to persons with disability. The parent or guardian of a differently abled person can take an insurance scheme for such person. The present law provides for deduction to the parent or guardian only if the lump sum payment or annuity is available to the differently abled person on the death of the subscriber, that is, a parent or guardian. There could be situations where a differently abled persons may need a payment of annuity or lump sum amount even during the lifetime of their parents or guardian. The payment of annuity and lump sum amount to the differently abled person during the lifetime of the parents or the guardian, that is, on parents or guardian attaining the age of 60 years. Reducing alternate minimum tax, that is nothing but the AMT rate and surcharge for cooperatives. Reduced alternate minimum tax is reduced for corporate cooperative societies to 15% and also reduced surcharge on cooperative society from 12% to 7% for those who for having total income of more than 1 crore to up to 10 crores. This would help in enhancing the income of the cooperative society and its members who are mostly from rural and farming communities. Extending period of incorporation of eligible startups for providing tax incentives. Eligible startup established before 31st March 2022 had been provided a tax incentive for 3 consecutive years out of 10 years from incorporation. In view of the COVID pandemic, they considered to extend the period of incorporation of the eligible startup by 1 more year, that is up to 31st March 2023, for providing such tax incentive. In an effort to establish a globally competitive business environment for certain domestic companies, a concessional tax regime of 15% tax was introduced by our government for newly incorporated domestic manufacturing companies, extended the last date for commencement of manufacturing or production under Section 115 BAB by 1 year, that is from 31st March 2023 to 31st March 2024. Income from transfer of virtual assets to be taxed at 30%. Better litigation management to avoid repetitive appeals. There has been phenomenal increase in transaction in virtual digital assets. The magnitude and frequency of these transactions have made it imperative to provide for a specific tax regime. Accordingly, for the taxation of virtual digital assets, budget proposed to provide that any income from transfer of any virtual digital asset shall be taxed at the rate of 30%. No deduction in respect of expenditure or allowance shall be allowed while computing such income except cost of acquisition. Further loss from transfer of virtual digital asset cannot be set off against any other income. Further, in order to capture the transactional details, budget also proposed to provide for TDS on payment made in relation to transfer of virtual digital asset at rate of 1% of such consideration above a monetary threshold. Gift of virtual digital asset is also proposed to be taxed in the hands of the recipient. A lot of time and resources are consumed in filing of appeals which involve identical issues. Budget proposed to provide that if a question of law in the case of an assessee is identical to a question of law which is pending in appeal before the Judicial High Court or Supreme Court, in any case, the filing of further appeal in the case of this assessee by the department shall be deferred till such question of law is decided by the Judicial High Court or the Supreme Court. This will greatly help in reducing the repeated litigation between taxpayers and the department. Increasing tax deduction limit on the employees' contribution to MPS account of state government employees. Increase the tax deduction limit from 10% to 14% on employees' contribution to the NPS is nothing but a National Pension Scheme account of the state government employees as well. This would help in enhancing the social security benefits of the state government employees and bring them at par with central government employees. A surcharge for association of persons is at 15%. The long-term capital gains on listed equity shares, units, etc. are liable to maximum surcharge of 15%. While the other long-term capital gains are subjected to a graded surcharge which goes up to 37%. In this budget, they have capped the surcharge on long-term capital gains arising on transfer of any type of assets at 15%. This step will give a boost to the startup community and extending tax benefit to manufacturing companies and startup reaffirms commitment to Atmanirbhar Bharat. Income tax is not an allowable expenditure for computation of business income. This includes tax as well as surcharge. The health and educational cess is imposed as an additional surcharge on the taxpayer for funding specific government welfare programs. However, some governments have allowed health and educational cess as business expenditure, which is against legislative intent. To reiterate the legislative intent, they propose to clarify that any surcharge or cess on income and profit is not allowable as business expenditure. Presently, there is ambiguity regarding set-off of brought-forward losses against undisclosed income deducted in the research operation. In the search operation, it has been observed that in many cases where undisclosed income or suppression of sales, etc. is detected, payment of tax is avoided by setting off losses in order to bring certainty and to increase deterrence among the tax evaders. In budget, they propose to provide that no set-off of any loss shall be allowed against undisclosed income deducted during search and survey operation. It has been noticed that as a business promotion strategy, there is a tendency on businesses to pass on benefits to their agents. Such benefits are taxable in the hands of the agents. In order to track such transaction, budget has proposed to provide for tax deduction by the person giving benefits if the aggregate value of such benefits exceeds 20,000 during the financial year. Next, we move on to indirect taxation. Customs administration to be fully IT driven in special economic zones. In a budget, they propose to undertake reforms in customs administration of special economic zones and it shall henceforth be fully IT-driven and function on the Customs National Portal with a focus on higher facilitation and with only risk-based checks. This will ease the doing business by Special Economic Zone units considerably. This reform shall be implemented by 30th September 2022. Phasing out concessional rate in capital goods and project imports gradually and apply a moderate tariff of 7.5%. A National Capital Goods Policy 2016 aims at doubling the production of capital goods by 2025. This would create employment opportunities and result in increased economic activity. However, several duty exemptions, even extending to over 3 decades in some cases, have been granted to capital goods for various sectors like power, fertilizer, textiles, leather, footwear, food processing, and fertilizers. These exemptions have inhibited the growth of the domestic capital goods sector. Similarly, project import duty concessions have also deprived the local producers of level playing field in the areas like coal mining projects, power generation, transmission or distribution projects, railway and metro projects. Reasonable tariffs are conducive to the growth of domestic industry and Make in India without significantly impacting the cost of essential imports. Accordingly, it is proposed to phase out the concessional rates in the capital goods and project imports gradually and apply a moderate tariff of 7.5%. Certain exemptions for advanced machineries that are not manufactured within the country shall continue. A few exemptions are being introduced on inputs like specialized castings, ball screw, and linear motion guide to encourage domestic manufacturing of capital goods. Review of custom exemptions and tariff simplification. More than 350 exemption entries are proposed to be gradually phased out. These include exemption on certain agricultural produce, chemicals, fabrics, medical devices, drugs, and medicines for which sufficient domestic capacity exists. Further, as a simplification measure, several concessional rates are being incorporated in the customs tariff schedule itself. Instead of prescribing them through various notifications, this comprehensive review will simplify the customs rate and tariff structure, particularly for sectors like chemicals, textiles, and metals, and minimize disputes. Removal of exemption on items which are or can be manufactured in India and providing concessional duties on raw material that go into manufacturing of intermediate products will go many a step forward in achieving the objective of Make in India and Atmanirbhar Bharat. Custom duty rates are being calibrated to provide a graded rate structure to facilitate domestic electronics manufacturing. Electronic manufacturing has been growing rapidly. Electronic manufacturing has been growing rapidly. Customs duty rates are being calibrated to provide a graded rate structure to facilitate domestic manufacturing of wearable devices, hearable devices, and electronic smart meters. Duty concessions are also being given to parts of transformer of mobile phone chargers and camera lens of mobile camera module and certain other items. This will enable domestic manufacturing of high growth electronic items. rationalization of exemptions on implements and tools for agri-sector manufactured in India. Exemption is also being rationalized on implements and tools for agri-sector which are manufactured in India. Customs duty exemptions given to steel scrap last year is being extended for another year to provide relief to MSME secondary steel producers. Certain anti-dumping and CVD on stainless steel and coated steel flat products, bars of alloy steel and high-speed steel are being revoked in larger public interest considering prevailing high prices of metals. Duty is being reduced on certain inputs required for shrimp aquaculture so as to promote its exports. Blending of fuel is a priority of this government. To encourage the efforts for blending of fuel, unblended fuel shall attract an additional differential excise duty of 2 per litre from the first day of October 2022. Duty on umbrellas is being raised to 20%. Exemptions to parts of umbrellas is being withdrawn. Customs duty on certain critical chemicals, namely methanol, acetic acid, heavy feedstocks for petroleum refining, are being reduced, while duty is being raised on sodium. Unblended fuel shall attract additional differential excise duty.